Welcome to Cold Brew Finance's U.S. End-of-Week Deep Dive, covering market moves in indexes, sectors, stocks, and global markets for the week ending Friday, June 6, 2025. Kicking things off, I'm Max Profit. Key indexes all finished higher this week. The Nasdaq Composite Index led gains, rising 416 points to 19,529. The Russell 2000 Index advanced 61 points to 2,127, while the S&P 500 Index gained 87 points to 5,999. Market breadth was decisively positive. The Russell 2000 showed particularly strong participation, with 3/4 of stocks advancing. The Dow 30 saw 24 of its components rise, while the S&P 500 had nearly 3 advancers for every decliner. Looking at weekly returns, the Russell 2000 and Nasdaq Composite outperformed, gaining 2.9% and 2.1% respectively. The S&P 500 rose 1.4%, while the Dow 30 added 1.1%. Over the past decade, the Nasdaq Composite has delivered the strongest performance with a 144% annual rate of return. The S&P 500 follows with 111%, while the Russell 2000 and S&P 400 Midcap have shown more modest gains.
Checking out best and worst performing equities, I'm Penny Stock. Leading the pack, Lyra Therapeutics soared to 24.28, up 19.35, marking a staggering 392.4% gain. The stock hit a new one-year high, with very strong upward momentum and volatility. Weekly returns show remarkable performance. Lyra Therapeutics posted a 392% weekly return with an average daily gain of 67%. Year-to-date, the stock has returned 135%, with consistent daily gains averaging 54%. Looking at longer-term performance, Lyra Therapeutics shows a 51.75% one-year return, though it's down over 3 years. Motive Care and Keval brands have struggled over multiple timeframes despite recent gains. Among large caps, Semiconductor led with a 19.3% rise to 50.17. Dollar General followed with a 16.6% gain, showing strong positive trend and notable volatility. Micron Technology added 14.9%. Weekly metrics reveal Semiconductor topped returns at 19.4%. Dollar General posted impressive year-to-date gains of nearly 50%, while Micron has returned 29% this year. Long-term performance shows Arista Networks leading with a remarkable 10-year return of 1,917%, an annual rate of 35%. Micron Technology follows with a 308% 10-year gain. On the downside, EPWK plunged 93.3% to 0.62, hitting a new all-time low. PTL and How Can AI also reached record lows, dropping 79.8% and 78.8% respectively. Weekly performance shows severe declines, with EPWK averaging daily losses of 29.6%. PTL has lost 97% year-to-date, while Cyclacel Pharmaceuticals is down 94%. Leading the downside, EPWK plunged 93.3% to 62 cents, setting a new all-time low. PTL dropped 79.8% to 28 cents, while How Can AI Parking Management Technology Holding fell 78.8% amid strong downward volatility. Cyclacel Pharmaceuticals and Helios Medical Technologies also hit new lows, falling 77.3% and 73.4% respectively. Among large caps, Lululemon Athletica led declines, dropping 16.2% to 265.27. Tesla fell 14.8% to 295.14. Conview, Wynn Resorts, and PG&E all showed strong negative trends, with PCG experiencing particularly volatile downward movement. Looking at weekly returns, Lululemon and Tesla saw the steepest declines in their daily averages, dropping 3.1% and 2.9% per day, respectively. PG&E has closed lower for 3 consecutive weeks, while Conview and Wynn Resorts showed significant negative momentum. Over the longer term, Lululemon is down 17.9% year-over-year, despite its 10-year gain of 315%. PG&E shows a 10-year decline of 69.5%, while Wynn Resorts has lost 23.7% over the same period. Tesla maintains strong long-term growth despite recent weakness.
And now on to U.S. sector performance, where communication services and technology lead with gains over 3%. Both sectors show very strong positive trends and consecutive weekly gains. Industrials achieved a new all-time high, continuing its very strong upward momentum. Market breadth shows strong buying across sectors. Technology saw 504 advances versus 168 declines, while energy recorded 125 advances against just 23 declines. Industrials maintained robust participation with 485 advancing stocks. Weekly returns highlight communication services leading with a 3.2% gain, followed by technology at 3%. Year to date, industrials leads the pack with a 9.7% return, while energy lags with a minus 3.4% return. Long-term performance shows technology dominating with a 550% 10-year total return, averaging 20.6% annually. Communication services and industrials both delivered solid 10-year returns exceeding 130%, while energy struggled with just 11.8% total return over the decade.
Communication services stocks showed strong upward momentum this week. Meta Platforms led the group, surging 7.7% to 697.71. Match and Live Nation Entertainment followed with gains of 6.3% and 5% respectively. All stocks displayed positive trends, with Meta showing particularly strong momentum. Short-term returns were notably strong. Meta Platforms posted the highest weekly return at 7.8%, while year-to-date performance shows a robust 19.2% gain. Take-Two Interactive has also performed well, with a 26.4% gain year-to-date. Long-term performance metrics reveal impressive growth. Meta Platforms and Take-Two Interactive both show exceptional 10-year returns, with annual rates of return around 23%. Match has faced challenges, showing negative returns over both 1-year and 3-year periods.
Among the weaker sectors, consumer defensive led declines, falling 1.5% to 902.96. Utilities dropped 1% to 410.15. Despite price weakness, both sectors maintain very strong positive trends. Market breadth shows mixed signals. Financial services displays broad strength with 400 advances versus 203 declines. Utilities shows weakness with only 29 advances against 55 declines in the latest session. Weekly returns highlight challenges in consumer cyclical, down 0.64% for the week, and notably down 6.8% year-to-date. In contrast, financial services shows resilience, up 0.64% for the week. Long-term performance reveals consumer cyclical leading with a 10-year ARR of 109%. Real estate shows the weakest decade performance with a 39% ARR, significantly underperforming other sectors.
Consumer defensive stocks showed significant weakness. Kenvue led the declines, dropping 8.9% to 21.73. Kimberly-Clark fell 7.1% to 133.55, displaying a very strong negative trend. Constellation Brands showed downward volatility, marking its third consecutive weekly decline. Weekly returns highlight the sector's weakness. Kenvue and Kimberly-Clark saw the steepest weekly declines at -9% and -7.1% respectively. Year-to-date, both companies maintain slight positive returns, while Constellation Brands shows the largest year-to-date decline at -22.2%. Long-term performance varies significantly. Procter & Gamble leads with a 10-year return of 111.8%, averaging 7.8% annually. Bunge shows the weakest long-term performance, down 17.2% over 10 years. Constellation Brands has struggled recently, down 31.3% over the past year.
Thanks for watching. I'm Max Profit, along with my AI co-host Penny Stock. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.